do it sooner, do it faster. I mean, it's not going to get better or worse because you did it a year earlier. It's just going to be what it's going to be. But I would say you don't got to have everything figured out in order to start something. And I think that's the number one fear for a lot of people, young people and old people. It's like, just jump in. You're never going to learn faster than by doing it, right?
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Michael Malone here on the show. Michael, welcome.
Thank you. Thank you. Glad to be here.
I'm excited to hear. For the audience's sake, who are you? Where are you from? What do you do?
I'm born and raised Des Moines. Here, I grew up in the West Des Moines area, Valley High School graduate. So, I've been here my whole life. Real estate professional by trade. Own and operate the Malone Property Group, which is my real estate investment business. I started about 4 or 5 years ago. Run that with my family right here in Clive. And so still working and operating in our backyard.
So you grew up. We went to Valley. After Valley, what'd you do?
I went to college. Tried that thing out for a while.
Yeah.
I was up in Iowa City for a couple of years doing that. Realized that I had given up on a chapter of my life that I wasn't quite done with, which was track and field.
Oh.
I was fortunate enough to have some success through high school, get me some awards, some accolades and stuff like that. But for whatever reason at the time when I went to college, I told myself, I'm just going to do the college experience. Well, I got about 2 years into that and just realized I really missed it. And the competitiveness, the structure, the camaraderie, the whole thing. Called up one of the coaches that had previously expressed interest in having me come and join their club. Fortunately for me, they were still interested. So I transferred over to UNI. I became a Panther, joined the team there, and finished out 2 years there. And got to have that full kind of college experience before getting out of town. Went to Chicago for about 5 years. After school, kind of do my little worldly travels and get to experience, different city, different culture, different life. And I did that for about 5 years in Chicago. Ultimately, that's where my real estate experience started, towards the back end of that. I did like many kids do right after college that don't have a plan or a vision or an idea of what they want to do with their lives. I kind of bounced around, did some different things, more so just enjoyed myself as a young man. But towards the back end of that, I realized I needed to start to put some focus into something. I wasn't 100% sure what that was, but I was fortunate enough to have some friends who had recently got their real estate license in downtown Chicago. And I've seen them have some success there and realized there's an opportunity there. This is interesting me. And for what it's worth, being in downtown Chicago, there's some money to be made. This is some high value assets
Absolutely.
down there. And interestingly enough, my first job in real estate was kind of a funny one when you look back at it now. But I got my real estate license and I joined a small little brokerage called Loop Apartments. Okay. Now, what they do, they get contracted out by all these different condo associations and condo buildings all around downtown Chicago. And they get their the pink sheets every Monday. And what it is, it's just the vacancies in their condos that they rent. Right? Mind you, these are rents, these are leases. And they send them out to us and we kind of have the liberty to market them as we will. And it's kind of the Wild West because you're competing against other people to market the same lease,
right.
Which is kind of an interesting element that you don't typically run into as a licensed agent.
Almost like an open listing. You're getting paid if you bring the buyer, the tenant only.
First come, first serve, eat what you kill, and whoever gets it first gets it. And so that was kind of interesting. That was my first jump into real estate. And I did that for 6, 7, 8 months. And it planted the seed, if you will. I knew that wasn't it. I knew that's not what I was going to continue doing, but it planted the seed enough to say, hey, I like real estate, human interaction side of things. And at the time, I wasn't doing anything terribly intensive. There was no underwriting. There was no high-end analysis.
Right.
How do I get this condo marketed and leased up as soon as possible so I can get my small little commission? I think at the time, the commission was the equivalent of like 1 month's rent. You had to do a lot of these transactions to make any type of real money. Though that was what it was. I said, okay, let's take the next step. Transitioned over to Keller Williams. Had just opened an office in downtown Chicago at the time. Now this is 2013, 2014. If you remember at that time, that's when Keller Williams was really exploding as a brokerage. They very quickly became the fastest growing brokerage in the country. Gary Keller was, on the face of everything at that time. So it was I was like, hey, well, that sounds pretty exciting. I think he had just published the series of books, one of which was the Millionaire Real Estate Agent. I think everybody in real estate or in real estate agency work has read that book at one point or another. I picked that book up and I said, hey, this guy knows what he's talking about, and joined that firm and got onto a team and kind of began my brokerage career. Again, I was just doing some buy sell stuff. I was still doing some lease work, given that it is, a large downtown metro,
Right.
there's a lot of lease, a lot of rent stuff going on. And the spark started. I found myself though becoming more and more interested in the big buildings that were downtown, right? The commercial side of things. I was just drawn to that much more than the residential side of things, which is anybody who's been in this realm around it knows that I always say that they're apples and oranges. They might both come from a tree, but they are very, very different fruits. After about a year of driving people around to see 25 different places on my Saturdays, listening to them determine whether or not this would be the best baby room or that would be, I said, all right, time for that next change. It wasn't resonating with me anymore. And coincidentally, around that time, I had a friend who is from back home here in Des Moines that I had known for many years. And he had recently gotten on with a commercial brokerage here in town. He had actually interviewed for a role that I don't know if he didn't get it or he passed on it to take this other role or whatever it was, but he called me up because he knew I was in real estate and he knew I kind of had my ear to the ground. I was enjoying my time in Chicago, but always, interested in coming back to Des Moines, coming back to the roots. And he called me up and said, hey, I think you should call this company. I know they're hiring to fill this brokerage role. It'd be a good company for you. And, I just kind of got out of an interview process with them. I accepted another job, but I know they're still trying to fill that slot, kind of give me the inside track. And so sure enough, I got on the horn, I called, I submitted an application, and fortunately was able to get a call, jumped on the megabus. I didn't have a car at the time, living in Chicago, jumped on the megabus, came back here for the interviews, and was fortunate enough to get the job. And that right there, getting on with this developer, was the true, in my opinion, kind of the true beginning of the career that I've, committed a lifetime pursuing.
Laid the foundation for you here and back to the roots.
Absolutely.
Back here home.
Yeah. Got me back to Des Moines, which again, I had always intended to do. I just didn't I didn't have the reason or the cause yet, but that checked both those boxes. And so it brought me back here.
Personally, your 5 years in Chicago, what did you take away at a personal level?
So many things. It just reminds you that, the world is an incredible place. A lot of different lifestyles, cultures, opportunities, industry. You could be talking about the same things and then clearly see the differentiation of how they're viewed or perceived here, say here in Des Moines versus how they're viewed, perceived, or even pursued, in the big city. It's a faster paced lifestyle. And I think both have their pros and cons. And I know for the different chapters of my life, they fit the needs at that time. I'm a married father of 2 now, and I couldn't imagine myself living in downtown Chicago anymore. At the time, though, I think it's exactly what I needed. There was a lot of exposure to a number of different things that I think is really important for any young person to get, early on, or as early on as they can, to understand the world of opportunity personally, professionally, and lifestyle-wise are out there. I got to rub elbows with a lot of people in that town that I would not have gotten to rub elbows with here. And again, that's not a bad thing, but it just opened my eyes to so many different things, different outcomes, different choices, different pursuits in life, and different opportunities. And I think that really helped me to be much more well-rounded and to understand and appreciate, everything that's out there. And, being able to bring that back here. One thing for me professionally, which was really kind of interesting, is, there you are absolutely. I mean, I was a young 23-year-old nobody with no resume, and $20 in my bank account. So it's not that like I had any merit, but I was absolutely, they say that small fish in a big pond. I was like a little guppy, out there. And though that can seem daunting, it's also what comes with the big pond is big opportunity, a plethora of opportunity in a bunch of different avenues that you wouldn't even think were available to you if you didn't know they were there, right? If you hadn't been exposed or been around something like that, it's just things that you don't see in a smaller community like a Des Moines, which is by no means necessarily small, but in comparison to Chicago, it's small. And so I felt like I picked up a lot of awareness and kind of some skill sets that I was able to bring back here to Des Moines at the time and apply. And I think it helped me put a foot forward in a lot of different interactions and opportunities that I had presented to me that I maybe otherwise wouldn't have been able to lean into or leverage to my advantage. But for what it's worth, I think I probably got some false credit, even coming back, just having on my resume that I worked in Chicago and I was in downtown and doing this. I think sometimes that adds a little extra merit to what you've done. It's like, oh, well, you're coming back to Des Moines, you probably learned a lot of things out there. And not that I didn't, I certainly did, but I think it, helped kind of develop, my resume, if you will, or my personality and my presentation.
Yeah,
And,
plus
I mean,
than may what be.
yeah. I got to be around, I was fortunate enough to get myself into some different circumstances where I got to be around some really successful individuals, both inside and outside of real estate, just by virtue of the networking that ended up going on there, and that's a really cool part about a city like Chicago. There's just such a diversity of people and personality and success paths. And for me, I was, fortunate to meet a lot of different people that achieved a ton of success in completely different pathways, completely unrelated. So seeing that diversity of opportunity and achieve success, I think was opened my mind to a lot of different things.
All right. So you land in Des Moines, you're focused on commercial.
Yeah.
Exclusively.
Yep. So I'm working for a local developer here in town. And again, that was kind of by design. What I had learned in my brief stint as an agent in Chicago is that I was really attracted to real estate. I was really engaged by real estate, and I wanted to learn more of it. Now, I knew my ticket in the door at the time was to become an agent, right? And for many people who get into real estate, that's their first step, right? They become an agent, and that's how they get into this game that is real estate. Well, I was fortunate enough to kind of commit to the idea early on, maybe not completely because I still had so much to learn, but I knew I liked the idea of the big opportunity in real estate. And that big opportunity typically comes from being the end user, right?
Yeah.
The person doing the transactions, the person owning the real estate business, the person buying these large assets, selling them, managing them for their own benefit, not necessarily that an agent. So though I was absolutely doing agency work, working for this developer, what I really took away from there, and this was kind of strategic intent, is to get a seat at the table to understand how they were doing these things, why they did these things, how they managed them on the day-to-day. When these types of things came up, what did they do with it? How did they craft their long-term vision, and what were they doing to achieve those things? And to me, that was a little bit of drinking out of a fire hose, but in the best way possible. I just felt like I got access to so many things that I might not have gotten access to immediately had I gone just the traditional brokerage route. Again, this developer here in town owns, upwards of 10 million square feet of Class A commercial real estate. Due to them being so large and so well established, they have their own construction divisions, their own property management divisions, their own asset management divisions, their own brokerage divisions. So I wasn't isolated in my one segment, that I was working on. I got to be in meetings and directly interacting with people, representatives in each one of these departments. So I got a really well-rounded kind of education or exposure to how this works as a business, not just my singular track, which was agency work. And again, that's what I wanted. I found myself constantly asking, as many questions as I could to, the construction department, right? Or to the property management department, and a lot of these, by nature of my job, I worked hand in hand with them quite frequently. But again, I got this direct access to them. And so it just accelerated my vision, if you will, to get to see, how this works as one big, well-oiled machine, as well as how it works independently. So it really helped me establish a pretty concrete foundation as to how this business works at the very high level, which is your standard pillars. You have brokerage, you have construction, you have property management. And that's kind of the three core pillars of just real estate, but the beauty of real estate is that there's so many other avenues inside of those.
Correct.
Right. And so I did that for a few years, and I had a lot of great experiences, was fortunate enough to be a part of and do a large number of transactions while I was there, all mom and pop, office leases up to large Fortune 500 leases, companies that were renting or leasing, 50 to 100,000 square feet, and that's interesting too, to get to be able to have those exposures simultaneously. It's one thing working with an independent client, a mom and pop operation, a local operation, that's one experience. When you work with these large established organizations, Fortune 500s, Fortune, 100 companies, seeing how that process works really, again, creates a very diversified, experience as to how to serve and operate inside of those transactions, but with those clients as well. Especially when you're first getting started as an agent, a lot of times you're taking those smaller clients.
Right.
You're working with friends, family, you're building your book. That's part of it, and that's natural. And so for me, within year one, to be sitting across the table negotiating a lease on behalf of my client, the landlord, with a representative from some Fortune 500 who's setting up a regional headquarters. That was some accelerated exposure.
No doubt.
You didn't work this hard to earn next to nothing on your money. Savings accounts barely move the needle. Tech stocks, AI stocks, it kind of feels like Vegas out there right now. Rentals, too oftentimes it means tenants, toilets, termites, and not the cash flow you were thinking. Well, so I've got an alternative. Little Guy Loans Co-Lending Fund. Qualified accredited investors are earning 10 to 11% annual passive returns. It's paid quarterly by co-lending with us alongside me on short-term first lien real estate loans right here in the greater Des Moines area. Your money's backed by a real property, not promises. It stays close to home. We've successfully funded well over $10 million in loans right here in central Iowa. So if you want steady income without headaches, click the link below in the show notes. Let's connect. We'll see if it's a fit for you.
What did you learn as a result? You going in your tenure there, dealing with the mom and pops to the Fortune 500 companies? How do they operate differently? And are they operating in a manner that is best serving them, or did you see instances where they should have operated differently, and therefore you kind of put that in the back of your head to go, cool, I've learned something here so that I can better operate myself in the future.
Well, one thing I learned from both sides of that transaction, getting to see the other side of the table and how they operate, make their decisions and things like that. Again, because I was doing solely, landlord representation. So technically I was solely representing the portfolio,
right.
Though I was obviously getting to see both sides. What I took away from the landlord representation side of things with, my boss and, the company I was working for, is that they treat all of these the same. And I think when it comes to portfolio management and asset management, that is such a not talked about or overlooked, constant that needs to be inside of your business. You need to negotiate, treat, and underwrite that mom and pop shop the exact same way you underwrite, that Fortune 500, so that you have consistent continuity across your leases in a large scale portfolio. If you're trying to put specific application to each one, everyone, where you're going to have a very diversified portfolio with very diverse leases, lease clauses, protections, escalations, the whole thing, right? And that
is a kind word.
That's probably
you've got Frankenstein.
You have Frankenstein is probably the perfect way of putting it, right? And then your property management team just hates you, right? Because they then get to navigate that day in and day out. One thing I took away from them, and I apply this into my own business every single day, even on the flipping side of things, the transactional element of what we do, it's all about consistency from project to project to project. Well, in their case, it's consistency from lease to lease to lease to lease. I don't care if you're leasing 500 square feet or 500,000 square feet. Sure, one might get a little bit more sway than the other, when we're negotiating lease economics or something like that. But the lease document's the exact same. The clauses that are mandated to be in there are the exact same. And it's continuity, because that's how you create a business system, right? And I took that away from them. And I think that's so important. And it's one thing I, really lock into even inside of my own business today, is because you can't have that variability constantly. It's just, all you're doing is creating a chaos machine, or as you said, like a Frankenstein. Right. And so that's one thing I took from them. One of many things I took from them, but I did appreciate how they were consistent. They knew what their business was. They knew what they wanted and what they needed out of these assets, and they stuck to it every single time. Now, they're in a position too where they're established enough and financially liquid enough and large enough to where they're okay to just tell a lease to kick rocks, regardless of who big they are. They know they're going to lease the space, and it's going to happen. So I think that confidence, one, is a byproduct of all of the consistency of work and systems that they implemented over the 30 plus years that they've been a company, and they get to reap the benefits of that now. It's wild, as an agent, I'd be storming into my broker's office being like, hey, I got a deal. Here's a deal. It's this large company, yada, yada, yada. And again, they treat all of these the same. If it didn't meet their metrics, what they needed, at least they said, no, we're not doing it. And, you as the young agent there, you're saying, this is a deal. This is one, it's a deal for me. Two, it's a deal of lifetime. It's a big company. But they knew what they needed in their business model, and they knew what they wanted in their systems, and they stuck to it. And I think that is an area that a lot of people struggle with inside of real estate, young people, as well as established participants of the real estate industry. So from that side of things, that's one thing I took away that I still try to stick to today. Stick to your guns, develop systems and stick to them, develop them and trust them. Right. And I think that's a pivotal element of any business that you're in, but very specifically real estate.
So at some point in time, it was time to move on,
to
have that next experience. And what did you do?
I knew I needed to kind of get out from underneath that employer, continue to swim into the waters at our real estate and see how I can get more hands-on experience and a little bit more freedom to start to do my own thing as well. Again, from day one, I always knew where my end game where I wanted it to be, and not even the end game, where I wanted to get to begin the path towards that true end game, right? And that was to be my own boss. It was to be the investor rather than the agent representing the investor. And so I transitioned out of there and joined the Cushman & Wakefield office when it opened up here in our Des Moines market. So that was kind of an exciting jump at the time, as bringing another global brokerage firm into our market of Des Moines was kind of exciting to see. And I think reflective of the markets, our local market continuing to grow and expand. So I made the jump over to there to be an independent contractor, a true brokerage agent at that point in time, right? And that in itself, what it did, it just opened my eyes even further, because now what I was getting to see was a diversity of these different areas of the business. Again, previously I was getting to see different areas of the business, but it was through the lens of one specific user. Now, very successful, very established, very good user. But the beauty of real estate is that it is so broad and it is so vast, and there's a plethora of opportunities and from all different angles. And so I was getting to get into the realm of buy sale transactions now, as where previously I was, just doing a corporate lease work pretty much. Not only that, but getting deeper into the realm of financing, learning more about the lending side of things, because now I'm servicing clients that, need lending. Again, in my previous role, I had nothing to do with that. They handled all that in a different department, and I wasn't a part of those conversations necessarily as to understand the ins and outs of that, and even just learning what banks need, what they require, what they like to see. Again, I was working for a user that could call any bank up and down the block, and they were going to open the checkbook for them. But now getting to see, and learn that side of the business. It was just kind of the next stage for me to continue to open my eyes to, again, like I said, the diversity of opportunity that is real estate. And it just excited me even further, because you're just seeing there's just so much opportunity. There's an abundance of opportunity inside of the industry of real estate. And it doesn't have to be through the most traditional paths. It doesn't just have to be through agency work or just through property management work. I mean, there's all kinds of stuff that can be done there. And so I was with that office for a couple of years, again, just doing the standard brokerage thing. But in the background, I was much more actively pursuing, my own personal education from an investment standpoint, and starting to map a little bit of a plan as to, when I was going to pull the trigger and do this first thing. And so I was kind of moonlighting as an investor, and during my day job, playing agent and doing work on behalf of other people. Again, though, the kind of underlying theme, which I didn't really express openly at the time because maybe in bad taste, but I wasn't terribly interested in servicing other people. And the deeper I got into this journey, the less and less interested I was in servicing other people. Now, that doesn't make you a terribly good agent, right? Obviously, that
kind of is the business.
Yeah, the majority of what you do there is you're selling a service to benefit someone else and being compensated for it. And I knew that, and I had that internal conflict at the time. I knew that I was becoming less and less interested in going out and procuring more clients. And it was nothing against the clients. I was becoming more and more focused on what I wanted to do in my pursuit. And I understand that agency work is a pivotal element of real estate as a whole. And I still very much do agency work to this day, but again, it's to service my own needs or needs of myself and my partners and things like that. And so as I got to the end of that tenure, I was really just in the mindset of I'm ready to focus 100% on myself, not be splitting my time between servicing outside parties while also trying to do things for myself. And I'm a bit of a all or nothing guy. And so I knew it was going to just take way too long to get this thing off the ground if I was kind of half and half. And it's just the way I operate. And so I went and I bought my first property on an online auction on a Thursday night at home in my apartment. My now wife and I were renting an apartment up in Johnston at the time, and we were getting ready to get married that year. It's always a perfect time to quit your job and dive into investing, full time. But I did it. Candidly, I went into the event kind of unintentionally. I mean, I say that, but I obviously logged into the online auction for a reason. I wasn't 100% confident that I was going to walk out of there with a house under contract, but I did. And I don't regret it. It was kind of a quick rip the Band-Aid situation. It's like, well, now I'm in it. So here we go. And that was kind of the beginning of the story there. Shortly after that, we made the transition. I was like, okay, let's go all in. Let's do this. And I kind of jumped in head first, and I ended up leaving that brokerage. That's where the beginning of the investment journey really truly begins.
You're all in. Now, what's interesting is you're all in on residential.
Yes, that's true.
Versus, you were brokering, right? Mm-hmm. Solely focused on the commercial side, but now from an investment side, it's a residential piece.
It is, absolutely.
What took you there?
Well, honestly, it was the lack of barrier to entry. For what it's worth, going and finding a single family residential house to flip or rent or something like that is exponentially easier to do than going from nothing to I'm buying a commercial building.
If you decided today you wanted to be in the business, you could have a home under contract this week.
I could call somebody this afternoon.
So relatively easy. Now you could do the same on commercial, but it's likely not a deal.
Yeah, right. And the other thing is, as anyone who's plays both sides of this fence, and this is just from a transactional standpoint, commercial deals, even when you have something, take so much longer to get through. I just quit my job. Keep in mind, I wasn't in a position to go try to acquire an asset that I wasn't ready to own or manage or be responsible for the financing on anyway, let alone wait 6+ months to get through the elongated, due diligence, underwriting, inspection, closing periods, all that stuff. Like, I needed something to chew on today. And so really I knew I was going to, though on paper, it seems like I was jumping backwards. And keep in mind, I'd never done an investment in my life. So really, I am at level 1 when it comes to investing. So though I came out of the commercial space and I started under the silo of residential, I still very much was, a day one investor. I wouldn't have done it any other way, even knowing now what I knew then. I think that's what I needed. I needed an opportunity that I could acquire quickly. I could get to work on fast and have kind of a controllable environment there. Having a note open with a lender for $150,000 on something that you're buying and remodeling is a little less stress and a little bit more manageable than a $1.5 million note, that you got to acquire some value add commercial buildings. What I needed that first step. I needed to go get my hands dirty. I needed to really get a feel for what this was, kind of in a controlled environment, if you will. And not that I was necessarily thinking about that. I just knew that I could get a residential opportunity way faster, way easier, and I could get lending on it more quickly than I could anything with commercial. I just wasn't ready for that, and I wasn't in a position to do that. So that's what we did. So we jumped down the commercial path and bought a house on the south side on that online auction and flipped it. It took me forever. I did it the old-fashioned way with my dad and my brother, nights and weekends type of thing. They'd get off work and they'd come help me, and we did it. For what it's worth, to this day, it's still a top 5 remodel that we've done from like the total scope of work standpoint. Again, that's what you get when you're just jumping in blind. This was not like a strategic acquisition where it was some quick cosmetic update, churn and burn hotel. This was a vacant house that the bank had foreclosed on, and for the better part of the previous year and a half, it had been used as a crack den, homeless people going in and out of there, drug users, the whole shebang. The house was trashed. It was sight unseen. So another beauty of this naive purchase, sight unseen, just had the exterior photo. So we got into the deep end fast. Yeah. We went from 0 to 100 immediately. But at the same time, naivety kind of blinded me from it at the moment. I look at that house now, I've walked hundreds of houses at this point, and I've flipped and acquired or wholesaled or whatever, 100+ houses myself at this point. And even having done what I've done now and the multitude of construction rehab projects, if I walked into that same house today, I'd still be a little like, okay, this is a big project. This is 60,000+, no question asked. I'm going to have to call him, and him. And this is, naivety kind of kept me a little blinded at the time because it was a combination of naivety of not knowing what I don't know. So I didn't even have the context to fully assess how bad this was or wasn't, or what this would cost or not cost. But equally, I was still fueled with excitement of just first opportunity. I was all amped up that we're in it. I'm going to flip this thing. It's going to be great. And I can see the vision. And it was. And we literally did 100% of everything in the project. And that meant literally learning how to do trades in real time. My dad, we were fortunate. My dad, most of his career was in the construction realm, predominantly as an electrician. But he'd been in the construction realm, and he's just that kind of guy, handsy guy. So though he's, master carpenter or anything like that, he knew more than enough, and he had his whole tool shed at his house that we just tapped into. We just went to work on it. I learned an enormous amount on that first house just from the rehabbing and construction side of things out of necessity, because again, this house was trashed. Yeah. It was terrible. And it really kind of kick-started the learning curve quickly out of necessity, which again, I don't regret, and I think was great. I think it accelerated a lot of things for us, knowledge and experience standpoint.
What did you learn from that you applied to the second house?
Due diligence is so important.
What does that look like when you're relative to flipping?
Getting a true understanding of the lay of the land with the house. Again, buying something sight unseen when you've never done a flip, let alone construction work in your life, is a pretty risky move. It could have gone a lot worse. And that house was kind of taught us so many things, not only in the rehab side of thing, but it took us like 8-9 months to do. But again, we were doing it like nights and weekends. We were doing it in the complete opposite fashion of how you should do it for any level of efficiency and quality and stuff like that. But we had nothing else to lose at the time and nothing but free time. So that's what we did. And we managed to get out of that closing, walk away with a check in hand. Now, it wasn't some massive payday. And if you look at the ROI over the course of the time and energy we put into it, it certainly wasn't worth it. It was paying pennies in the grand scheme. But it was enough to have proof of concept. And we walking out of there with a check in hand. And it just locked it in for us. It's like, okay, we can do this and money can be made doing this. We need to get better at doing this. It showed us that we did have a lot to learn and really instilled that in us. It's like, okay, if we want to keep doing this, we clearly can, but we got to work on some stuff. And so with each step, and as it does in any kind of development, with each step, we got a little bit better and a little bit more aware. We developed a little bit more consciousness of the ins and outs, the inner workings of a house, starting to associate timelines and budgets attached to those things. From there, it kind of evolved into how do we create systems so that we can get through these things efficiently? How do we take that 9-month remodel down to a 6-month, down to a 4-month, and depending on the case, the house, now we average around 45 to 60 days just for any house. But, it took a long time to get to that. How do we start backfilling specific resources such as subcontractors, vendors, things like that? Even just getting pricing awareness, that was a huge learning curve. And I feel like a lot of that comes through trial and error.
What's your pricing awareness relative to contractors, relative to the price of the home on the resale?
All of them. I mean, in that specific instance, I was referencing more just like material and construction costs. That's a pivotal element of flipping or anything you do in real estate. But I mean, we are predominantly a flipper. That's kind of our bread and butter. And it always has been. You got to know what you're paying and why, and whether that's a good price or a bad price for the labor and for the construction, because, you could acquire a house at the best price and you could have that ARV be spot on. But if your labor and material numbers are just completely out of whack, that project's a botch, right? It's done. And so learning that, I was fortunate to having been in real estate as an agent prior, the underwriting element of running comps and putting an ARV on the back of something, that came pretty quickly to me. It's pretty natural. Again, I've been doing a lot of similar underwriting. Now, it wasn't residential flips, but knowing the base premise of pulling comps. I say, comping out properties is not rocket science. It's just a matter of following a process and being honest with yourself about it.
You're right. You're right about that one. I've seen a lot of people get that one wrong.
And it's funny. That's what I think gets wrong most often, even in this now, getting deals sent to me, evaluated by wholesalers or, whomever. And I mean, I've underwritten thousands over the past 5 years, deals that people send to me, deals that I've looked at, deals on the market, deals that I've procured ourselves. And that is one of the most important, arguably the most important skill set of anything you do in real estate. The rest, you can fumble your way through and you'll probably be okay. The rest, you can source out to somebody else to do for you. But you as the investor, the number one thing you can and have to do is you got to know how to put the numbers together on paper in a realistic, executable way. Because if you don't, none of the rest matters. Right? It doesn't matter if the foundation of your evaluation of this opportunity is botched from day one.
Yeah, I've always said you should never outsource the valuations.
Well, at that point, are you even still an investor? If you're letting that portion go?
Yeah, and certainly you don't want to outsource to a realtor. As much as I love my brother, get advice, get comps, cool. Get all the data, and then ultimately you're going to have to make the decision. Is this comp set realistic? And where do I think it falls? And sometimes the answer is yes, but sometimes no. Sometimes you need more information.
Well, and I think to your point, the reality of just basic human psychology is everyone has their own ulterior motive. That contractor, that's his payday. He's trying to maximize his payday. That realtor, that's their commission. Hey, if I can get this to sell for an extra $15K above what you're asking, my commission just went up, whatever, amount. I'm going to try to push for it. Everyone's not to say it like maliciously, like people are out to screw you over. But at the end of the day, it's basic human psychology. Everyone's got their own ulterior motive, right? They're them first, you second, no matter what. It's basic human psychology. And the most successful people in this realm or in this industry that I've ever talked to, and I certainly try to practice myself, is they know what they're talking about across the board. Now, do you need to be an outright expert across every single segment of what goes on inside this real estate industry? No, but you need to be able to have enough information to be able to talk or evaluate with confidence, right? When you're going through each step, to be able to know that contractors bullshitting you and marking their stuff up way above market rate for this type of service, right? When that agent does try to say, hey, I think instead of 250, we should go 280. I got this one comp that really flussed that. You having the confidence to be able to say, hey, you know what? One, I performed this at 250. Two, I feel confident that this is a 250 house, and that's not within my business model to stretch it and risk the potential outcome of it sitting or losing that opportunity, things of that nature. Even property management, most people outsource property management, and I think that's fine too. But you as the owner can't just be hands off and be like, I don't know, they're running it. They're running it. That's when you look up 12 months from now and your properties haven't performed. The money that you thought would be in your bank isn't there.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Who would rave about a property manager? They may be okay, satisfied.
Yeah.
Passes,
100%.
Not talk rave. No.
Yeah, and that's
on the residential side
specifically. Property management is a whole conversation topic in and of itself, and that's so spot on. It's being a property manager. I will say this in their own defense: being a property manager is a thankless job. My wife was a commercial property manager for BH Management here in town for about 2-3 years. So she was doing large 300 plus unit complexes, leading a team out there. I've witnessed, I've obviously managed our own portfolio, but I've witnessed firsthand, what she went through. And we joke and we say, and I'm sure we didn't coin this, but PM isn't property manager, it's problem manager, right? All you're paid to do is deal with and field problems as they come in. And very rarely when a problem comes up and you have to take it to your client as the project manager, is it met with excitement and happiness, right? It's a tough job, but it's a necessary one. It really is. And God bless the people in that industry that do it for other people. I do all of our property management, but it's our properties, right? So I'm answering to myself. God bless people who do it for other people, but it's a different lifestyle.
Uniquely challenging business, no doubt about it. You went on, you fix and flip, you learned a lot. You continue to do that to progress forward, and then started building a rental portfolio at the same time.
Yeah. And, for over the 5 years, our primary focus and bread and butter is and has been fix and flip. So really, that's been the bulk of what we've done. We've had a small portfolio here in town that we've grown, kind of ebbed and flowed. We've built it up and sold some off, built it up, sold it off, just as the different needs have arisen, or we've just said, hey, got an offer we can't refuse on that one, and let's capitalize on what we've created there. One thing I learned early on, when I first got into this, so we're into investing now, right? I'm buying these single family homes, and at the time, that's when that BRRRR method was really popular, and everybody was using the BRRRR. And though I still think it's a great method, it really aligns with different segments of the market at different times, right? Just like the multitude of different strategies in real estate,
because it was a lot easier to execute a BRRRR method 3 years ago. And interest rate, I don't want to say impossible, but it's far more challenging. You're not 7% rate.
You're not doing those big cash out refis anymore, right? You're not and expecting it to still cash flow in any capacity at that time. So again, talking timeline, which I think is interesting. This is obviously nationally, but even locally, Des Moines was really seeing a surge. 2019 through 2023 was kind of an interesting time to be in real estate as a whole, especially in the single family residential segment of the business. The interest rates were low. Houses were appreciating at, damn near double digits every 6 months. And you could throw a stick down the street and have 4 opportunities or, 4 new sellers. And God knew all you had to do was get it flipped, get it on the market. And you were getting 10 offers in the first 24 hours. I mean, it was a wild time, especially for someone like myself at the time, just getting into the business. And, knowing that this isn't necessarily normal, but not realizing how far from normal it actually is. It was I tell you what, if I knew then what I knew today, I would have made 4 times as much money as I did back then. But I was still very much brand new. I mean, right as I was getting into these first few flips, this was happening in our markets and in real estate. So I think what it did for me and for a lot of people in the industry, not just newcomers, is it kind of made us a little ignorant, if I'm being honest, because you could mess up, you could buy it wrong, you could botch your construction budget, you could botch or miss your timeline completely, and you're still going to make money on the back end because someone was going to offer you $20,000 over what you listed it for.
Almost all the mistakes.
There was no such thing as a bad project back then. No such thing as a bad project. God bless those little times in the cycle. They come and they go, and I don't know if I'll ever see anything like that again. But I saw a lot of people. I'd love to sit here and say I'm the all-seeing, but really I think it was a little bit of natural skepticism to be like, this doesn't feel like I can, this is going to be forever, and just waiting for the fallout, which ultimately kind of happened. But I guess I was fortunate for myself, unfortunate for some people around me who I knew and was watching as witnessing, kind of buy into it a little too heavy and get themselves wildly over leveraged, whether that's with buying too many flips at the same time or buying a portfolio off of bad metrics.
Sure.
And the second stuff started to shift and those flips weren't moving as fast, or you were no longer getting the 20,000 over asking offers. Maybe you're just getting the asking offers, or
you told yourself where you thought an ARV would be because things were appreciated so heavily. I'd have guys underwrite and go, we're going to deliver this to market in 6 months. Therefore, we're going to be 8% ahead of where current values are.
At least, sometimes more. And then you put the frosting on the cake of you bumped it up even more when you finally went to list it. And then somebody still gave you 20 grand over that because they were competing against 20-year properties. It was just a wild time. I saw some people, especially on the portfolio stuff, when those 5-year arms came up, and all of a sudden, holy smokes, we're not at the 3% anymore. We're at 8%.
Right.
Assets squashed. Not only are we not cash flowing, we're in the red equally. You get these people who are buying flips at Wolf, and we don't even negotiate purchase price. Just sell it to me. It'll be fine on the back end, right? And then they end up pumping all this money into these flips. And then by the time they go to sell it, stuff had started to taper. And it's like, oh my gosh, now I have a ton of properties sitting on the market. I thought I was just going to power through these. I didn't think they were ever going to sit and stuff like that. And
did you guys experience that in your portfolio, having a number of these sit on the market, getting caught kind of in the drawdown? By that I mean prices softening and days on market expanding.
With the rentals, we were fortunate enough that at least on the lease up side of things, that stayed pretty consistent for the most part. We were able to fill, and we operate in small single family, multifamily. Those assets usually tend to lease up pretty quicker than a larger multifamily, true apartments and stuff like that. And so I think we benefited from that. That wasn't necessarily by design. That was just a fortunate benefit of that. But certainly, like anyone else, we started to see the changes with the flips. And again, I, by nature, at least in practice, try to be, though I've gotten my hand slapped a few times, have always operated very conservatively when it came to underwriting. And that is a little bit of my nature, but also coming from my background working for that large institutional, developer. That's a lot of what I learned from them. Don't peak and valley yourself with excitement or change the market. Stick to the plan. Underwrite is this. And it's one of the many great fundamental things I learned from them, right? A group that had done it to the highest level of success and been doing it for decades. And they always underwrote everything conservatively. They never stretched it here, stretched it there just to make a deal work. Like I told you, they said, no, it either fits this or it doesn't. And that got instilled in me. And I mean, that's where I first learned to underwrite deals, be it that they were just lease deals. But again, it's the same mindset. And so that stuck with me. And so I certainly believe as a byproduct of that, I probably got lucky and avoided a lot of, potential failures or scars, if you will. And in the moment, there was times when I was second guessing myself. I mean, because again, everybody under the sun was thinking, man, should I have passed on that deal? Should I have just taken it down and made it work? Because so many people around me were just taking it down and making it work. You see the money they're making and the velocity in which they're moving. So I mean, though retrospectively, I am very glad I stuck to my guns there. There was a number of times in that window when I was second guessing myself. I could make that one work, and the shit, I mean, look at, how stuff's appreciated. It'll probably work on the back end. I could have done, 5, 10, whatever, 50 more deals that year had I loosened those metrics or those criteria a little bit. Yeah. Hindsight, I'm really glad I didn't. Yeah. But I'd be lying if I said in that moment in time, I had a lot of moments where I was like missing out on deals, missing out. At the time I was telling myself it was because I was saying no to different deals because I didn't think they penciled. But in retrospect, I'm glad I did because it did save me from, just buying bad deals.
2026, as you look forward, what are you most excited about?
Well, what I'm excited about is, just continued opportunity. A lot of what I'm excited about is the things that we're doing internally to continue to grow, mature, and expand as an organization. I like to think with each year, we look back, we learn from our scars, and we kind of go through that maturity process. We become more systematic, right? We become more organized. We're able to execute at a faster rate. One thing, for what it's worth, and I don't know if people are saying this out loud, but I know a number of people I've talked to aren't exactly mad about it. But one thing that comes with these market cycles, when stuff, shifts, I don't like to use the word necessarily slow down. I mean, deals are still getting done here in Des Moines. Houses are still very much selling. We're not at some catastrophic, moment where, the market's about to fall off the cliff. And though you hear a lot of headlines, but I think a lot of that, and I'm getting off topic here, but I think a lot of that is just a byproduct of, 2022, 23, people created that as their benchmark of expectation. So anything below that seems terrible and it seems bad. To what I was saying is, houses are still selling. We're still doing flips. We're still, pursuing the same level of volume that we always have, and have confidence that we'll continue to be able to do so. Do you need to tweak a few things here and there? Sure. But that's called investing. You can't do, when you're underwriting deals or the numbers you're using, you can't use the same number year over year over year forever. Those variables change. But what I like is that with the shift in the cycle, where you could say we're getting back to the lower part of a cycle, right? Is one of two things. One, it clears out a lot of the excess, in my opinion, if you know what I'm talking about there.
Yeah.
3 years ago, you couldn't turn a corner without bumping into a wholesaler or another flipper or another this, that, or the other. And not that I'm ever combative or competitive against anybody else. We try to stay in our own lane. It doesn't hurt when a lot of those people disappear.
Sure.
And the truer market opportunities present themselves again. We were getting to a point where deals were getting sent out that and they were borderline laughable and stuff. And I feel like we're getting back to a more honest pursuit of things.
It's incredible the deals that got done back in that era, that 2021, 22 era, because tremendous amounts of money at times got made. Generational wealth gets created in times where it's darkest.
Exactly.
Right?
And they always say,
but it's darker.
Right. They say buy at the bottom, right? And, everyone who we saw through 18, 19, 20, 21 that were at the peak of their financial performance in this industry were people who started in 8, 9, 10, right? Sure. And so this, for me, at 5 years in, I still very much consider myself a new investor. If I'm looking at the grand timeline that is, going to be my career in this, this is my first bottom of cycle moment, right? And as we said, any real estate magnate in the history of real estate, that's where they got it. And then they managed successfully and built their businesses around it, and they rode that wave back up, however long that next cycle, lasts, or whenever it starts or ends or whatever. But I mean, I'm excited for that, to get this first opportunity. And I'll tell you, I don't feel like I've necessarily slowed down in what we're doing. And I think a byproduct of that is, as I was kind of mentioning a moment ago, I think there's I don't necessarily want to say new opportunities, but I think opportunities are finally getting back into a shared space that actually makes sense again. The people who are still there to scoop them up are the people who are actually doing this. The people that weren't here for the quick money grab and now I'm on to the next shiny object, whatever that may be. And so, I mean, for what that's worth, just keeping a conscious eye on the local market and the larger market as to just the activity levels and what's going on. That's exciting for me. But I always try to hold a level of optimism. I understand that real estate's a long game. Business and entrepreneurship is a long game. None of this ever happens to its completeness in the span of 2 to 3 years. This is a game, and we're in it for the long haul. And so I'm excited for 2026. I know we still got a lot of economic variables that are floating around, but again, I believe real estate's very local, and I think Des Moines is still moving along. I've spoken to a number of agents, just true residential agents, throughout the course of the year that said, honestly, my transactional numbers are just fine. They're good. Actually, I'm having, a very respectable year, a very good year. I think that's good to hear, those like boots on the ground types messages, because we hear a lot of these headlines that can come across a little contradictory to that and make it sound doom and gloom a little bit. Houses are still getting sold. They're getting sold, again, so long as you're doing your front end stuff right, they're getting sold, plus or minus, where you're setting them. So,
Mike, are you ready for the final 3 questions?
Yes, sir.
If you had one piece of advice for your 20-year-old self, what would it be?
Oh man, 20-year-old. I'm gonna be 37 next week, so that's a long time ago.
Happy early birthday!
Thank you. That was a long time ago. Let me think. Back to my 20-year-old self. One is you don't need to have it all figured out right now, but you should probably start looking around. If that makes sense. I think so much of the 20s are, at least for myself, was the farthest I looked was the end of my nose. It's right there. What's in front of you, what's grabbing, it's right there. I think I don't regret anything about, through my 20s. It was a lot of experiences and experimenting and, touching this, that, or the other. The thing I'd say though is, just the whole, the old Nike slogan, like, just do it, try it, get out there and do it. I retrospectively look back at my timeline to getting to my first investment, like actually being the investor buying it. Do it sooner, do it faster. I mean, it's not going to get better or worse because you did it a year earlier. It's just going to be what it's going to be. But I would say, you don't got to have everything figured out in order to start something. And I think that's the number one fear for a lot of people, young people and old people. It's like, well, I've never done that before, so I can't do that. Or I should read these books first. Or it's like, just jump in. You're never going to learn faster than by doing it, right? You can read every book, every podcast in the world. You're never going to learn faster than by having to do it yourself. And so I would probably say, just don't worry about figuring it all out, because you're going to probably die someday at an old age, still having never figured it all out, right? So just get out there and do it.
2 books that changed your life.
2 books that changed my life. The Compound Effect by Darren Hardy is one of my favorite books ever. Now, this is not real estate focused, and I know on a lot of these, people try to default to a real estate book. It's a book that I try to read every single year, and it's just the basis of it is, creating good daily habits that ultimately develop good physical outcomes, good mental outcomes, good mindsets. And it's just understanding the power of clocking in each day. And I tell myself this constantly going through this pursuit. This industry, this pursuit's not exactly a fun one at times, and it's challenging. Obviously, it has opportunity for big rewards, but I've had some moments, even in my 5-year experience, I've had a handful of moments, more than that probably, where the sky is falling. I don't know. This is a new thing for me. I don't know how I'm going to get out of this everything. Keep showing up, clock in every single day, keep doing the things you need to do every single day. And that's where the big forward growth happens, not in these one-off, I got that one deal that made me the filthy rich individual. It's like, keep doing what you need to do each day. So that's one I try to read every single year. 12 Pillars is a good one too. I just recently reread that one. I don't hear many people talk about that one much, but it's like 130 pages or something. It's a really quick read. Again, I'm really big into the base mindset books, and I think that's what really drives people, regardless of what your pursuit is in life. It's like having the right head on your shoulders, the right mindsets, and the right paradigms, for how you're viewing things and what you're viewing things through. But those two, I just read 12 Pillars. I think I'd put that one on there. That's one I would recommend anybody. If
you were cast away on an island for a year, you can only get 3 pieces of data about your business each and every month. What 3 things must you know every month to know how your business is done?
I need to see the P&L, the KPIs, P&L, KPIs, and the bank statements. I think if you create an actual business, which I'm absolutely working on and trying to create with my own, though I do admit I'm still very much in a lot of roles inside of my business, that kind of the JOB. But I think if I could phone it in, so long as I see the KPI, P&L, and you know what? I'm going to say take bank statements off, right? Because if I got the P&L and the KPIs, I got what I need there. I'd say give me the pipeline. Let me see what's in the pipeline regularly. Let me see how it's moving. Let's see what's coming into it, what's about to come into it, what's about to go out of it. And those would be it. The KPI for me, if I had to have one, it would be purely KPIs. I think if you set your proper KPIs throughout the different segments of your business, and then you just manage those to success day in and day out, I think it's a really high likelihood that your business will be running successfully. Yeah, because that's really what it's about. And that was a big business development growth time for me when I first kind of got introduced, not only to KPIs, but what they are, what they mean, and how to manage them to success, because you knew what the outcome was when it's successful. And so I am big on numbers inside of our CRMs. We use a really nice CRM that tracks these KPIs pretty robustly, not only on the construction rehab side of things, but on our marketing and acquisition side of things as well. And if you give me those KPI reports across those 2 things, I think I could phone it in.
This has been a fantastic conversation. We could talk for days.
Yeah.
This is great. But for those who want to find you, follow you, connect with you, where can you go? What should they do?
Yeah, I'm on social media. It's like everybody else. Michael.j.malone on Instagram, right? You can look me up on Facebook just as my name. Malone Property Group is kind of the name of our business and operation there. The social media pages up for those as well. But one thing I'm certainly trying to do in 2026 is do a better job of connecting and networking here locally. I think that's one thing that the Des Moines market could really do a better job of. If I'm being honest, I feel like there's a lot of players, in this realm that we operate in, and a lot of people doing great stuff. And maybe this is more reflective of me, but I'm putting it on myself to make those connections as well. But I'd love to see connection opportunities to build some, strong, collaborative local relationships.
Fantastic. Well, in that vein, we'll drop the links below in the show notes so that people can reach out, connect,
Awesome.
and
Yeah.
advance that.
Awesome.
I sincerely appreciate being here. This has been a great conversation. Thanks.
Yeah. Thank you. I've enjoyed it.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.